Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is June 12th, Monday, the beginning of a brand new week. We are going to take a look at Sinclair Inc. This is a broadcasting company out of the communications sector. This was a recommendation from a viewer, possibly a subscriber. If you are a subscriber, Tanya, go ahead and drop a comment down below. Let's jump right in the video and take a look at this one. And again, this was suggestion from Tanya Myers, thoughts on GM, SBGI, MATX, and MED. I picked out SBGI because it was one I was not familiar with. MATX is on the list as well, and I will do GM. I shot you a link to the Medtronics video that I had done previously. A full disclosure, my wife does work at General Motors. She's an executive there, and I used to work at General Motors, so I do like the company. I might be a little biased on that one, but I'll try to be as unbiased as possible whenever I do that video. Let's continue on with this one and take a look at Sinclair. So we are talking about Sinclair Broadcasting, founded in 1971. Really, you can run through this and pause this if you would like to read more through it. There are a couple things I'd like to note. Again, founded in 1971, so they've been around a while. They started out in Baltimore, Maryland, FM radio station. They are in UHF television stations as well. So they had their start in FM radio and television. They are still in television, but they do have their hands in some other things as well. I wanted to highlight. At 2022, here we're going to fast forward to 2022. As a result of several MVPDs dropping carriage of the RSNs, the RSNs entered into new financing and other terms to raise liquidity for longer term to launch Bally Sports. I am familiar with Bally Sports here. The RSNs direct to consumer subscription. So they're offering a subscription service to, it looks like a workout company, probably similar to like a Beachbody, something like that. As a result of changes in the subsidiaries board composition, the RSNs were deconsolidated from Sinclair's financial statement effective March 1st, despite Sinclair's equity ownership and management service agreements. Here's another one I wanted to touch on. This same year, we added gamification elements such as free-to-play games, rewards, and NFT store Own Mine, and other social participation features. So this is similar to some people who are out there in the NFT space, the cryptocurrency space, right? That's kind of what this is tied into. And then keep going. Tennis Channel launched T2, connected TV fast channels, and continued their international distribution. So they are now a national and international company, not just in the Baltimore, Maryland area, right? They started out as a regional company. They've kind of expanded over the years. ATSC 3.0 was now deployed in over 50% of the country. So again, international, or national, and then international presence. And we and USSI Global, so that's their international arm, it looks like, entered into the first live business use case to deliver data to electric vehicle charging stations. So that's interesting there. I'm not sure exactly how they are tied in, but they are tied in some way with electric vehicle charging, and I think that might be an interesting revenue stream for them. It'd be interesting to see how that works out in the future. If you want to know more about them, check them out. sbgi.net. That is their homepage where I pulled this information from. You can pause this again and read through it at your leisure. And we are taking a look at them because they were down 0.65% on the day. We are talking about Sinclair Inc, ticker SBGI, out of the communication sector. 52-week range as low as $12.64, as high as $25.79. At $15.25, they are closer to their 52-week low. Average volume 923,000. Today was 720. You can see that sell off. Looks like they had a little bit of a rebound at the end of the day, but overall, from start to finish, they were down. Market cap of $961.345 million. Small cap company here, right? Very small, actually. Not even a $1 billion company here. A beta of 1.41, so they are more volatile than the overall market. Price to earnings PE ratio is $3.51 per share. So you're paying $3.51 for every dollar that they earn. That's low. Earnings per share EPS is $4.34. That's actually pretty decent. That's a nice number there. Their next earnings date is August 2nd, so look for that if you're interested for in this company. Forward dividend is $1 paid out on the year. We'll see they are a quarterly payer. They have a very nice dividend yield, 6.51% here, right? And that's probably because of this pullback. If they were to pull back any more, that would even be higher. Ex-dividend date was May 26th. Looks like they're going to have a payout on June 15th, right? So you would not be in line for that June 15th dividend if you bought them now. You needed to buy a day before the ex-dividend date. And according to Yahoo Finance, they have a one-year target estimate of $21.80. I'm not affiliated with Yahoo Finance, just one of the sources that I like to look for information. Now, I like to go in and look at statistics, look at a thing called dividend yield theory. We're going to compare their 5-year dividend average, 3.32%, to their current, right, 6.51. They call it their forward, but it is their current 6.51. If it is higher, which it is, that speaks to potential undervaluation on this company, and it is almost twice as high. So that is a smoking high dividend yield here. They do have a low payout ratio. This is not exactly what we'll see here in a little bit, but it's pretty close. 23.04%. So very nice low dividend payout ratio. They have a lot of room to expand that if they have growing free cash flow. Let's take a look at that. Another one I like to look at under financials is free cash flow. We want growing free cash flow over time because we want our dividends to be growing over time. 2019, $760 million. 2020 was $1.3 billion. Big jump up there, but then a huge drop down to $247 million here in 2021. From 2021 up to 2022, another big jump up to $694 million. So they are kind of up and down all over the place. A lot of communications companies are, but I'd like to see them a little more stable than this. Overall, from 2019 to 2022, they were actually down on the free cash flow. So it's not really growing free cash flow per se. This would be one, if you were interested, I would definitely watch, right? They are repurchasing their own stock. And I would say while it's cheap, I would do that too if I like companies repurchasing their own stock. So that's a positive. That's just a little bonus there. And again, all this information brought to you by Yahoo Finance, not affiliated. And I always recommend more than one source. So another one that I like is stockanalysis.com. And according to the 6 stock analysts, they've had to take a look at this. They call it a consensus hold. Now, because of the free cash flow issues, I might agree with this. All the other metrics so far look pretty good. Though that free cash flow, big, huge drops really concern me in a company whenever they get cyclical like that, especially because I like growing dividends over time. So we'll see how they look at dividends here in a minute. But anyway, let's keep going. Low estimate of $15, which would be a 1.7 decrease from where it currently sits at $15.25. Average estimate is $20. That would be a 31.06% increase in the stock price. And if it happened to hit their high of $30, that would be a 96.59% increase in the stock price. Now, this stock analysis offers you a lot of the same information that Yahoo Finance does under financials. You'll find, the income statement, their balance sheet growing. You want to look for growing revenue. You want their debt to be under control. You want them to have more assets over liabilities. All that information under financial statistics is where we're going to look over here for ROE, return on equity, and ROIC, return on invested capital. Forecast is what we're looking at here, and dividends we'll see on the next page. Again, a lot of the same information that we saw from Yahoo Finance. This is just another source. Always look at more than one source so you can back check the information that you're getting is accurate. But on to the rest of it. Return on equity, ROE, and return on OIC. I like 10% or better, and this return on equity is smoking. 32.8%. Very nice. That's very nice, actually. Return on invested capital, a little lower than I'd like to see, 8.10. But if all the other metrics worked out, I would not be as concerned about this. It's pretty close to 10%, just under. I like 10% or better. So technically this, meets the ROE, but not the ROIC. But again, not a huge red flag there. It's really only the growing free cash flow so far. Let's keep going here. And dividends. So like we saw on the first slide, it was around 23%, a little over. This one's saying 26.74. Either way, they're in the 20s, right? So low payout ratio, dividend growth of 11%. Though let's look at that and question that for a minute. So they have been paying dividends all the way back to 2013. That's as far as I went back. But anyways, I snipped from 2016 forward, 16.5, and that's 16 cents in the fraction of a penny, right? That's what that 5 is. They jumped it up in 2016, May 2016, to 18 cents. They rode 18 cents all the way to the end of 2018. So they were flat for a couple years, and then they jumped it up November 2018. They rode 20 cents through 2019 to 2020 to 2021. So they were flat again for several years. Jumped it up in March of 2022 to 25 cents, and they've been there ever since. So they do raise their dividend, but it looks like they raise their dividend sporadically. It's not really a consistent every year over year dividend. So this 11.11% growth is a little misleading if you're looking at it in terms from year over year. If they were to raise it, let me see again, 25, they raised it in 2022. So if they were to raise it here in the next payout or two, they would still have growing dividend. But overall, they do go flat at times, so that's a little concerning. But low payout ratio, they have a lot of room to grow. So the only real concerns on this one would be the free cash flow. You want to watch that. right? Wait till the 2023 numbers maybe come out. If you were interested in this company, that's probably what I would do. I would hold on this one. If I owned it, I would hold it. I wouldn't sell this one. The low payout ratio and the high dividend yield, both are very nice. And if you own it, I've been nibbling on Verizon, so that's probably where I would add or continue to add if I wanted something in the communication sector. But this is not a bad looking company if you are looking to add something for the communication sector. I would just watch the free cash flow and whenever they report out, see how they're looking as compared to last year, because they are a little sporadic on that. Overall, not a bad company. Looks like there might be some value here. I might watch it a little bit for the next quarter or so to see where it's at. $15 or under. It looks like the estimates are consensus hold. So I would probably hold if this was me. This is my investment criteria. You can pause it and go through this if you like. And that is really it. Let me know what you think of Sinclair's. Thank you, Tanya, for the suggestion. Appreciate it. I will try to work in the other ones that you wrote in your comment as well, probably over the next week or two. So look for those videos. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors so we can share our experiences. Just like Tanya did, share our suggestions, share stocks we're watching, stocks we've done great with, stocks that we're avoiding, stocks we've done terrible with, just our overall investing experiences and information with each other down in the comment section. If you have a question, go ahead and drop it down there. If you have a stock like Tanya did here that you would like me to cover, drop it down in the comment section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk. Can't lose money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.